Welcome to TradeTheMBI.com. This is John. This report is for the 17th. No surprise. We talked about this. Below that ABM yellow, we were looking for a move down here towards that ABM magenta, and sure enough, went and broke. And that was something we were looking at if there was going to be a maintaining of that magenta below yellow, and now below 25 also adds additional pressure if it sustains there. But you can see we're also getting that change on the DOC here, rising orange. Always use a little bit negative, particularly when it comes at a crossover point right here with the steel. And that was just enough to start to move, and we'll see if it holds up through the day. The cyan moving back above DOC red, which would definitely be a broader short signal, and very close. We're like a 1 here so far on the shakeout, which moving into negative would definitely be a broader negative signal. When we say negative, I mean, look at where we're at. We're here between the 176. We didn't even broach the 76. So modest at best. That looks for, major downside move would be towards the 47.42 at the ABM green here. And if these readings continue as expected here, we would expect that would not hold at this particular stage, but I would expect some support resistance right at that point. From an NQ standpoint, a little bit stronger, but also pretty similar from its reading. Not quite the crossover. So NASDAQ again, still being the leader, holding things up in a broader context. Everything was pretty much negative the other day, and then China's data coming out. Not spectacular. Of course, they meet their expectations, which nobody believes. What the interesting one was the population decline. Actually saw minus 9 million individuals net of births. That's a problem for the future for China that people don't really talk about. It's the same for Western economies, and why the immigration, because most of them are in a population spiral, and that starts to accelerate pretty darn fast when your birth rates don't meet expectations. Another 5-10 years, and those numbers start to exponentiate, and your population starts falling off, and you can't maintain your economies. And this is something the US and European countries have fought with, which is why they bring in so much immigration, because the only way to keep the economies growing, they have to bring in more people. So that's the only bonus of the day was, well, actually not much from yesterday, but slight improvement in yield. We're seeing a big move back towards a more normalized baseline. And again, we always talked about this, where the bond market has been notoriously wrong in the last year plus, just really unable to get a handle on what is really taking place, which is ironic because they've always been the leader in knowing where things were. But we've been talking about this for quite some time, how notoriously they've been off on their projections of where yields would be and where the Fed would go, which that's an interesting one. It doesn't happen that often. Oil off slightly here. Still in a fine range. The longer it stays there, it's a net okay for the economy. It's not a boost, because it certainly isn't low enough to be a driver of economic activity, but it's not an inflation driver at this particular stage. Though we already saw that, the way that the U.S. measures inflation, that is sort of ridiculous. I think the standard food basket was always the best approach, because clearly it costs a lot more than the inflation rate for the standard basket of eggs, milk, and all that makes up that. And you clearly can see that inflation far exceeds what the government has stated it is. But they like to exclude this, that, and the other just to make it as soft as possible. Europe took a bit of a decay. Which is like we were talking about. It's just amazing that it is where it is, because the European drivers are looking ugly, no matter how you do it. And again, they're continuing to fund the war in Ukraine, and that, which is going to be a continued drain on them. From a gold standpoint, also fading back significantly. And that's just a lack of inflationary pressure at this particular stage, though it's sort of inherent in the devaluation. So Gold is definitely still not finished its potential runs. Bitcoin, after the news breaking about the ETF, and that faded off quite a bit, but supporting right here at that 50% level, though we can see the potential for additional weakness, and that means that if we approach that 50%, pretty good likelihood that we'll not be able to sustain that level. Should selling continue, I think intraday on that. Actually, you know what I do? I can show you. 250 tick chart of Bitcoin that I follow there, and it's pretty clean from that standpoint because again, the small amount of size just shows you not that many get traded because at only 250 tick, it's not that many bars overall, but it's still relevant to pay attention to also with the ETH because as the governments want to move more towards the CBDCs and that, everyone's always complaining about those coins and things that are tied to currencies, but those are the only ones that are going to survive outside of the Bitcoin that's pretty much has a robust support network around it. From a 50K standpoint, we could see that breakdown. Now, we really haven't done anything. I mean, we came back to fill this almost positive extreme. It was right down here. You could see it was yellow at that particular stage. Was the next bar that was red, but we'd already filled it back and we're literally at that same spot. And there are no other positive extremes from this move up. So nothing forcing the drawdown, but this dip below the red line, which would be all the way down to the 4720 range. So significant move, and that's in line with what we see from the ABM readings on the daily chart. So not a surprise there. You can see in the pre-market, that's just a straight exodus. But when we gotta grab it there, we slide back to what happened intraday. It was a lot of back and forth, so it was pretty clean from early on. You get the big rise, faded all the way back. A few positive extremes on that one, starting right at the initial breakout, actually went slightly below it, then they tested further and then rallied up towards the close. But so it didn't look like a lot, but that was still a significant range. And now it's starting to accelerate just a little bit. You've sort of ended your new fund money buying, and it really wasn't enough to sustain early profit taking. Plus, there just isn't a whole lot of excitement at this particular stage with economic realities until there's some signaling from the Fed that they're really going to be aggressive in cutting rates. I think they may believe that they've solved their liquidity issues by just doing what they do best, jawboning, and talk a lot, and people buy it, and it's worked for now. It's a confidence game. As long as everyone's still okay with it, it works. But underlying fundamentals continue to be the reality check that we'll see more about. As earnings and things start to come through, and we get a real idea of where businesses are as far as hiring and sustained growth projections, because a lot of them have not been fantastic as it relates to that. So we'll just continue to follow the readings. As always, though, anything wrong, I will put it up on the Skype chat. Have a good one. Trade well.